To the point on advisors, right? Advisors, Merrill Lynch, UBS, et cetera, Schwab, Independence, control about $30 trillion.
Yeah.
Okay, it's a big number.
Mhm.
And the average advisor today has sub 3% exposure to cryptocurrencies.
Hey guys, welcome back to Everyday Finance. In this video, Yusko discuss about features of ETF and crypto. According to Mark Yusko should have found out about it a month ago. But Mark Yusko wasn't focused on advisors at the time. Appropriate advisors Schwab, Marion Lynch, UBS, etc. Independence control of roughly $30 trillion. Indeed, it's quite large quantity, and the typical advisor of today has sub 3% of assets are in cryptocurrency, with the great bulk of those being in businesses. The people who hold it, such as MicroStrategy, etc., don't appear to have any ETFs, because those don't trade until tomorrow. According to 91% of advisors, their most valuable resource for handling client assets is ETFs aren't mutual funds like they were 20 years ago, nor are single stocks and bonds. That was ETFs 30 years ago. So when you add an underweight, significantly underweight for digital assessment, but you are aware of the vast bulk of that $30 trillion is completely unaffected. So let me start zero, therefore, the vast majority have none. Additionally, according to the report, 25% of advisors had been questioned about cryptocurrency in the past month, and lots of things Mark Yusko discuss, so please watch the video to end. And share this video, and subscribe our channel Everyday Finance. Thanks.
Yeah, it's just the starting gun. I mean, there's so many things about this, with one caveat that I'm going to come back to that I kind of just learned about this morning. And I should have learned about it a month ago, but I wasn't paying attention. But to the point on advisors, right? Advisors, Merrill Lynch, UBS, et cetera, Schwab, Independence, control about $30 trillion.
Yeah.
Okay, it's a big number. Mm-hmm. And the average advisor today has sub 3% exposure to cryptocurrencies. And the vast majority of that is in companies like MicroStrategy, et cetera, that own it. They don't have any, obviously, ETF, because the ETF doesn't trade till tomorrow. 91% of advisors say their most important asset for managing client assets are ETFs, not mutual funds. That's 20 years ago. Not single stocks and bonds. That's 30 years ago. It is ETFs. And so when you combine a massive underweight to digital assets, whereas the vast majority of that $30 trillion has zero exposure, right? My whole thing, get off zero. So the vast majority have zero. And the other thing in the survey was that 25% of advisors have been asked in the last month about crypto. So at least 1 in 4, just this month, has been asked, hey, why aren't you buying me crypto? I hear there are these things coming out. So all of that conspires to, let's just do simple math. Let's say it's 10 basis points. Okay, it's a reasonable expectation. Just dip your toe in, 10 basis points. That's $30 billion on an asset that trades $8 billion a day. Now, to Michael's point, if BlackRock does have the $2 billion, which I have no doubt they do, and they try to put it all in tomorrow, price can jump a lot. We can't take I actually think $3.5 billion is going to trade tomorrow. That's been my number for a while. At day one, $3.5 billion will come in. That's a problem. So, I mean, a good problem. But the reality is, it's not going to be 10 basis points. Let's say it's 100 basis points, 1%, which is not a crazy number. Now you're talking 300 billion, not tomorrow, but over some period of time. Again, to Michael's point, it'll take some time to educate and have some fancy ads and all that good stuff.
According to Mark Yusko, that number will continue to rise, but the potential for spoofing now increases enormously due to the liquidity pool for futures. And by spoofing means that you may essentially go unclothed short in the futures market, which is why you are aware of what transpired when the first futures contract was issued in 17 boom market. Declined initially, futures ETF declined. This is an absurd statistic on the first day. BTO raised $1 billion, or $950 million today. It has raised $2 billion, even though they have decreased 31% since their founding and have decreased by 75%, however, they have somewhat recovered. That's a terrible structure, considering that it has a negative roll yield and other bad structural characteristics. Despite its poor result, it managed to draw in over 2 billion viewers, because the billion became 300 million. And after that, they raised what was likely another billion, which doubled. Estimate that they raised $700 million, which quadrupled to $2 billion. Let's back to the Mark Yusko interview.
But I think the really kind of amazing point of all of this is once UBS and Merrill put it in the model portfolio, it's over. You don't have a choice as an advisor to not have it, right? As a fiduciary, as a member of the team, you have to do that. Now, there's no, in the old days, it used to be you had to buy the one that they got paid the most by. So a little kickback going on. And that may still happen. But now you got 11 choices. And there's going to be money that's going to go into these things, and it's going to be big. Now, the caveat that I'm nervous about, I spent a lot of time doing some research on today. I don't know why I missed this, but they're releasing another freaking futures contract tomorrow. That is bad news. That is very bad news. And it's a big liquidity pool. So it's CME, and the guy who runs the CME is not our friend. So let's just put it lightly. And I do worry that spoofing, right, which is what they've been doing to gold forever, is going to start. And so that's the one little caveat that I think its number go up for a while, but the ability for spoofing now gets exponentially greater because the liquidity pool for futures, and what I mean by spoofing is you can basically go naked short in the futures market, right? That's why, when they issued the first futures contract in 2017, what happened? Boom, market went down. First futures ETF went down. Here's a crazy stat. BITO raised $1 billion on day one, 950 million, call it $1 billion. Today has $2 billion, despite the fact that they're down 31% since inception. And they were down 75, but they came back a little. But so think about, that's a crappy structure, right? It's got negative roll yield, it's a crappy structure, bad performance, and yet it still attracted more than $2 billion because the billion turned into 300 million, and then they raised another probably billion, and that then doubled. I guess they raised about 700 million, and that doubled to 2 billion. So I don't know. I'm a little nervous about that.
According to Mark Yusko, ultimately, the same individuals that control the media are the reason it's okay that run finance will always portray this sector in a bad light. Blockchain technology and cryptocurrency are by happenstance. What Bitcoin and etc. do for finance services, what the internet accomplished to fully connect media and commerce, and there's impossible to halt it. Yusko discussed this endlessly on Saturdays, but the 838-year monopoly on trust is now finished, even though the bank's run of 838 years ended today and won't end tomorrow. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.